Hello NRI friends, welcome to SBNRI, the next generation NRI banking. My name is Mohit, I am a CA by profession, CFA level 3, and in this video presentation, today we will talk about the NRO account, which is the non-resident ordinary account. So under the NRO account, we will start by giving you a basic overview of the account, followed by the nomination and the repatriation processes, understanding the joint applicants, and by the end of the video, we will understand how is NRO different from the other types of NRI accounts. So to start with the overview, we will be considering some factors, starting with the purpose of the non-resident ordinary account. So the purpose of the NRO account is to maintain the income that is earned from India, such as a pension, salary, or rent from any of your properties, etc. The types in which you can opt for accounts are savings, recurring, and fixed deposits, while the currency in which you have to maintain the account is INR. The tenure of fixed deposits range from 7 days to a maximum of 10 years. The interest on the fixed deposits can be earned up to 7.30%, which I would like to mention is something that updates every month. So if you want to know about the latest interest rate, you can just visit our blog and you can get the relevant details. The minimum balance that is required to be maintained in an NRO account is rupees 10,000. The process of repatriation, which means the transfer of money from your Indian bank account to your foreign bank account, can be done, but up to a maximum of 1 million US dollar per financial year. Now we will talk about the tax deductions. So since the account is used to maintain the income that is generated in India, a tax on the interest earned is applicable at 30% along with surcharge and education cess. And if you want to know in detail about the taxation and you want to learn about how you can opt for a refund depending on your tax slab, you can visit our website. You can write to us in the comments, and by the end of the video I will also provide a QR code which you can scan and directly join our NRI community and put up questions directly to us. The next thing that we will be discussing is the repatriation process. So for the NRO account, like I mentioned, there is a limit of repatriation up to 1 million US dollars per financial year. So the process is simple. All you need to do is you have to submit some of the documents which I'm about to mention, and you have to submit it at the bank branch in India. Now you can either submit it physically if you are in India, or you can download the forms online and then send the signed copies to the bank via courier. So the forms that are required to be sent are the Form 15CA, Form 15CB, Form A2, and there's a request form from the bank which you need to fill. So the purpose of the Forms 15CA and CB is basically just to let the government and the bank know that you have paid the taxes that you had to pay on the amount that is being repatriated. Now, the 15 CA, you need to fill it online. You can print the acknowledgement and then send it to the bank. The 15 CB is basically the certificate of an accountant. So for that, an accountant needs to fill the form and then he will share it with you. After that, you can send it to the bank by courier. And the form A2 and request form is basically a normal repatriation form wherein you will fill in the details regarding the account where you want to debit the money to. And that's pretty much it. That's the process of repatriation from the NRO account. After that, we will discuss about the nomination. So all the major banks in India, like I have mentioned for the NRE video also, they have the process in place. You can either opt for online or offline mode. Under online, you just need to visit the bank's website, log in your account. Under the add nominee option, just put in the details of the nominee. The bank will verify them and the nominee will be updated. But if you are opting for an online mode, then you need to visit the bank branch in person and fill the DA1 form, which is the form for the updation of a nominee. There are two similar forms which you can also opt for if there is a need. The forms are DA2 and DA3, which are used for the purpose of cancellation of a nominee and replacement of a nominee respectively. Now we will talk about the joint applicants in terms of NRO account. So an NRI can open a joint account with other NRIs for an NRO account. But if we talk about joint account holding with a resident Indian, it is also possible in case of NRO account. So an NRI can open a joint account with a resident, but there is a condition. That is, the account has to be opened on former or survivor basis. And it is only for NRO account. You cannot opt for this facility for the NRE. You can only open a joint account with resident Indian in NRO account only. Now the former or survivor basis is a basic condition, which means that the resident Indian will be the former operator and you will be the survivor. And you can only operate and get the entire rights of the account if something happens to the former. So that is how the ownership of the account follows, but still you can opt for a joint applicant in terms of NRO accounts with a resident Indian. Now we will talk about how is NRO different from the other two types of NRI accounts. We will consider the very same factors starting with the purpose. So the NRO account is used for the purpose of maintaining the income that is earned in India, such as the pension, rent, etc. The NRE account, on the other hand, is used for maintaining the income that is earned from outside India. An FCNR account is again used for foreign currency investments in India. Talking about the currencies in which these accounts are maintained. So the NRO and NRE are both maintained in INR, whereas the FCNR is maintained in foreign currency. Talking about the tenure of fixed deposits, under an NRO account, like we mentioned in the overview, you can opt for a minimum of 7 days to a maximum of 10 years, whereas for NRE, the range is of 1 year to 10 years, and for FCNR, the range is of 1 year to 5 years. The interest on these deposits can be earned at a rate of 7.30% under NRO, 7.81% for NRE, and 4.05% for FCNR. Now, again, I would like to mention that these interest rates updates every month. So, for the latest rates of interest on these deposits, you can visit our blog. Following the next factor to consider is the repatriation, which again I will mention is the process of transferring the money from your Indian bank account to your foreign bank account. Under NRO, there is a limit. There is you can only repatriate up to a maximum of 1 million US dollar per financial year. But in NRE and FCNR, both the principal and the interest earned is completely repatriable. Talking about the final factor, which is tax deduction. So for both NRE and FCNR, there are no tax. Whatever interest that you are earning on your funds, you can just repatriate it directly to your foreign accounts without paying any taxes. But since NRO account is used for maintaining the income in India, taxes are applicable at 30% along with surcharge and education cess. And that would be all for the video. Thank you so much for being with me in this one. We have more videos in line. Don't forget to like this video, share the video with a friend, subscribe to the channel. And here is the QR code I was talking about. You can scan it directly. You can just pause the video, scan the QR code, join the global NRI community that we are hosting. And you can also join the waitlist on the website. Visit sbnri.com and join the waitlist. We are launching our app pretty soon, and we are sure we are going to make your banking experience seamless. Thank you so much for being with me.